let's talk all about this and these heavyweights. Dryden Pence, Chief Investment Officer, Pence Capital Management. Also, Mike Dickens is with us, Head of Research at Horizon Investments. Thank you both for being here. Mike, I'll start with you. NVIDIA, for example, that's up over 200%, so tripling. What do you say about these kinds of names? Are they? I've had people come on this week and say it still has plenty of room to run. What say you?
Yeah, I mean, absolutely. When we look back at this earnings season, you just got immense growth on on overall earnings for these companies in aggregate, up 25%. And then you've got the rest of the market that overall earnings are down 6%. So you've got, a relative earnings trough here where overall, I think the market is really starting to demand growth because it's quite scarce. And they're really starting to bid up these prices. And that's exactly what you're getting through the earnings and the top line. I mean, some of these numbers are just extraordinary that they're putting up. Just to put some dollars on it, overall $5 trillion in market cap added to these 7 names, where the rest of the market's up, less than $1 trillion. So it's really extraordinary. I wouldn't be surprised if we have a slight pause here, but it'll be really tough, really tough for investors to sell these off with putting up some of these numbers, I think, right now.
Yeah, and just to review, I mean, in case people aren't familiar with what the Magnificent Seven are, these are these names that have incredible, 60%, 100%, 200%. So it's Apple, Microsoft, Alphabet, Amazon, NVIDIA, Tesla, Meta. That being said, Dryden Pence, welcome to the show. Good to see you. Wanted to know your thoughts. Do any of these names in the Magnificent Seven seem to still have a lot of upside potential to you?
I think all of them are going to have a reasonable amount of upside potential as we roll through this, because I think that we've got another 3 quarters of what's going to be an attractive comparison for them. They've got some currency that has been a headwind, now turns into a tailwind. But I think what's really important is over the next 3 quarters, you're going to continue to see the earnings come up, which will help justify some of these high PE ratios. And then the broader market seems to be doing better as these companies came out of the earnings recession maybe 3 quarters before everybody else, and everybody else is now beginning to catch up to them. So we're still favorable on pretty much all of the names. We just don't think that the tremendous growth that we've had in the 4 or 5 months of this year is going to continue, but it's still very positive to the next 3 quarters.
So, I mean, when you look at this group here, is there 1 or 2 that you start to question, because, or maybe is it just, it's not just that they're doing well, but also the market breadth improved that some of the other names are coming up along with it, Mike?
Yeah, I think looking at the rest of the year, the rest of the market definitely seems interesting. A lot of points the other guests just made that, kind of earnings comparisons are going to be relatively easy going forward. And additionally, looking at estimates right now, the bar isn't set very high for the rest of the market and these Magnificent Seven necessarily on the next quarter. So you are going to have a little bit of that on a fundamental basis, to have some wind at your back for the rest of the market, more or less kind of catching up. And on the price side, I'll add that you look at the S&P 500 versus just an equal weight version, and you're about a 12% spread year to date. That's one of the highest we've seen, throughout the last 30 years. Only matched by 2020 and back in 98. So, that alone, doesn't mean that the rest of the market's going to catch up. But with a positive fundamental backdrop, I think you got some nice catalysts there to close that gap a little bit as we head out through the end of the year. But I also by no means think that necessarily means these growth stocks sell off. I just wouldn't be surprised if they take a breather while everybody else kind of catches up.
Yeah, you said the Magnificent Seven can't be ignored. It may be a good idea to consider looking at the rest of the market. So not saying that they're going to sell off, but really looking at market breadth. Dryden Pence, your final thoughts here on the group overall, because you said you still like the group, but what else are we missing in the big picture of these markets that is on your mind, really?
Well, I think the big thing is the Fed is still on the table, right? And you have to recognize they need to basically, you don't have to strangle the economy. You can just choke it a little bit. And they're still trying. This inflation issue is still out there. They can't declare a victory lap yet. But I think the robustness of the economy is coming on. We're going to see a reacceleration. You might see some inflation challenges here at the end. You can look at oil prices going up. And so I don't think we can take the Fed off the table. What that means is while the Magnificent Seven are going to continue to do well as they grow these earnings in this environment, is this broadening out of the rest of the market. And you can see, I think, some stabilization of the Magnificent Seven, followed by a continued appreciation of the broader nature of the market. So again, for the next 3 quarters, we're pretty positive across the board.
Right. Thank you both so much. Good to see you. Dryden Pence, Chief Investment Officer, Pence Capital Management.